Cool. Let's jump into it. Yeah, we got Hans with us as well as Uguay. We're going to talk a bit about uh, ZCs, of course, and then a bit about percent markets as well. So maybe you guys want to kick us off. Tell us who we're talking to here. I guess we could go Hans and then Uguay, and then we can get into the products as well.
Yeah. Can you guys hear me okay?
Sound great?
Yep.
Cool. Yeah, happy to be on the show. I'm Hans. I'm the founder of ZCombinator. Yeah, I think the move is starting with a bit of a background, and then I can kind of explain what we're building.
Also I think your Discord is going crazy, so I don't know if you can tweet that tab or mute that tab. Sorry.
Okay.
Is that coming through for you, Dom, as well?
Yeah, for sure.
I'm getting it as well. If you just go on like do not disturb, maybe.
Yeah. Is it gone now?
Yeah, it's gone. Okay, thank you.
Okay, cool.
You don't want the clips to be like 30 seconds, just be like
Yeah. Thank you. So yeah, I've been a builder in crypto since 2022. That's when I kind of launched my first product. It was an NFT lending aggregator actually. And then that didn't really work out. Obviously NFTs went to zero, but I've been really interested in building for like a while, and I just wanted to keep going. So the next thing I worked on was basically like a AI agent for executing across blockchains. And I worked on that with Uguay. You can probably explain more about it. That unfortunately didn't get the traction we wanted as well. And then I think since the start of this year, I've been really aggressively iterating at a faster pace, because I would say like each of those products I worked on for like a year, and it, obviously felt really bad when they didn't work out. So I've been trying to, I guess, like build smaller scale until I found something that I think the market resonated with, and then work from there. And I can talk about it more when I talk about ZCombinator, maybe after Uguay's intro, but a lot of the learnings that I've had from like the aggressive experimentation I've been doing this year have basically led to what ZCombinator is today.
And I want to stop real quick and touch on that before we get into you, Uguay, a little bit. But I love that you said the aggressive experimentation you've been doing. You see these platforms, and I feel like where they fail or where they kind of stop innovating is when they stop experimenting. And you've got people that can right curve and left curve. I've talked with Mercy about this recently. And it's good to be right in the middle, where it's like you're not overthinking things and you continue to experiment, but you're also not experimenting. So I'm glad that you pointed that out, and I'm interested to hear how you're experimenting here in a second. But Uguay, go ahead.
Yeah, sure thing. Can you guys hear me?
Sound great?
Sure. All right. Yes, I guess I've been full-time in crypto since 21. Had traded crypto, I guess, as early as 2017. So been around for a bit. I was originally over at the monetary policy team over at Olympus DAO, if you guys remember 3.3. And then promptly left to kind of work with Hans here on in the NFT finance, NFT lending space. As Hans kind of mentioned, like NFTs largely imploded as a market, and we kind of like shifted gears into the AI agent space. So we both also worked on AI agent infrastructure. I think a lot of the learnings around what kind of actions AI agents can take, and then as well as what kind of AI agents are even worth tokenizing, kind of ended up leading into the eventual development of percent markets, which I can kind of get into. But I would say like both Hans and I kind of ran into very similar problems, had slightly different design perspectives around like products that can be built. And then a lot of that ends up leading into like a partnership between the two protocols.
Nice, cool. Well then, let's get into the two protocols. Then we'll start off by with ZCombinator here. If Hans, you want to kind of take that.
Yeah, absolutely. So like I said, I think ZCombinator, like most transparently, started from my failings as a developer. And I think other developers have felt this as well. Like it feels really, really bad to like work hard and truly believe in a product and launch it and then have no one really care or use it. It's kind of the inevitable and like ever grinding search that like builders go through. And I feel like how I would describe it is like, it really feels like the bottleneck to like, let's say creating value and creating something that people want to use is about like understanding the market and getting distribution rather than like just shipping as fast as possible without really any direction. As part of the aggressive experimentation I was doing this year, I realized that launching tokens for products was like super, super helpful for getting distribution and market feedback. Because obviously like there's instantly people that care. But I think the problem with that is like there felt like this gap where I needed an easy way to do this, but existing launchpads kind of made it feel a bit extractive. I think first of all, I was earning trading fees, right? So I felt like I was focused on making sure attention and volume was high as possible, rather than, let's say, like building the product attached to the token. And then also, I think the other problem was I never actually had that much supply. And I think a lot of other builders have felt this as well. But the fact that I needed to buy supply for something that I was building kind of made very little sense to me as like a quote unquote legitimate developer. And I think ZCombinator is essentially just addressing these failings in the most direct manner I can possibly think of. So like the core mechanism and how we're different from other launchpads is twofold. One, there's zero trading fees. Two, instead of the token having no mint authority, the protocol itself controls mint authority. And what it will do is send 1 million tokens of the initial 1 billion supply. It will mint these tokens and send it to the dev every 24 hours. And what happens when you have these two mechanisms is that one, the dev is aligned with the price of the token, because one, they're getting ownership of it, and two, they only get paid when the market cap of the token goes up, not when volume goes up.
Wait. Okay, so let's touch on this real quick. So
Yeah.
you just said every 24 hours they get 1 million tokens, and then after that you said they only get paid when the market cap goes up. So does those 1
Yeah.
million tokens get emitted to call it a treasury, and then when it hits a certain milestone or market cap, it gets sent to the devs?
So the way it works, like the reason I said they only get paid when the market cap goes up is because the emission will happen regardless. But if your token is worth zero, then your emissions are basically worth zero.
Okay.
Yeah.
Copy. Sorry. So keep going.
Yeah. So I think like as a developer, like kind of like building for myself, like I don't have to worry about attention hacking to get paid. And it feels like I'm able to experiment and build products that are, a bit more longer term aligned than I can on other launchpads. And I think overall, we launched, I would say like 12 days ago at this point. So it hasn't been long at all, but I've been really happy with the feedback we've had so far. There's been a lot of devs that have kind of come out of the woodwork and kind of reflected a lot of the pains I was feeling as well throughout this year. And I'm really happy to be able to help them. And our primary focus right now is like onboarding these devs to come and build on top of us so that everyone can build products that people actually want to use.
Okay, let's touch on that real quick. And Uwe, I want to get to you here in a second too. But I think, Hans, you make a good point. Onboarding devs is important. I think that's a pain point we've seen really up until kind of Believe cracked that. And that's what really, I think, set Believe apart initially. Now you see people like Street, like Maya's going out for Street and literally onboarding people in Silicon Valley and in China. How do you guys get those onboards? How do you get those high quality projects coming to you? Because that's ultimately like, maybe you might have the best features in place, the best system, but without high quality launches, you have nothing, right? So how do you do that?
Yeah, I think that's a great point. And because we're so early, we're really focused on like, okay, who is the most likely initial target market, right? Or initial cohort of devs. And I think the answer we came to is that it's not Web2. And I think that's like pretty unique in our approach. I think one of the things that you are able to do with the time controlled token emissions is you're able to use those token emissions to actually incentivize product behavior and community behavior you want to see. So, and this is like kind of a long-winded answer, but I'll get to the point soon. Like one of the things that we did when we launched ZCombinator initially was we tweeted out and we're like, listen, we are getting a stream of emissions. This is how it works. Because we're in a really early stage, what we're going to do is use these emissions to reward people who drive early attention to the protocol. And our token was sitting at 10K for like 12 hours. And I think I would point to that tweet and basically like us doing that as a directly leading to like increased attention and eventually like what we've come to today. And that's all to say, I think like crypto native developers, like people who understand that they can use a token to incentivize product behavior and market behavior that they want are our target market. I think this basically directly leads from the mechanism. I think a lot of Web2 developers, there's a very, very steep learning curve into understanding even launching a token, but then on top of that, how you can use a token properly. I think a lot of devs that are crypto native kind of understand this a bit more fundamentally. And so we're really focused on crypto native devs who have been building projects, understand what tokens can do and what they're used for, and are able to integrate that into their product to make it grow.
What's interesting too is you kind of get this snowball effect, which I think Believe kind of proved with their launch, right? You have 1 or 2 good launches, and then you see, oh, Dupe launched on accident, but that caused Fitcoin to launch, and that caused this person to launch, and that caused so. It's not necessarily getting every single person, but getting the ball rolling is important. Uguay, maybe you can kind of pivot us here into what percent markets is and kind of how that ties into ZC.
Yeah, absolutely. I guess before I kind of jump into what percent is, maybe I could give a little background into like some of the problems that we were facing and also kind of how that ended up leading into percent. So obviously I had mentioned before, we had been building Slate for a bit. Last year, it was kind of like PK agent meta. And at the time, we felt pretty uncomfortable launching a token. I think we'd be considered like, at the time, like one of those teams that like the market would have rewarded rather heavily for launching a token, given what we had built. But ultimately, like we weren't really interested in exiting our project. And the only thing on our minds was really like product market fit. And we knew that launching a token was a powerful way to get inbound and bootstrap growth. But something that like was biting at us pretty much the entire time was we knew that if we didn't nail down the tokenomics on the first go, or if we just like didn't engage in basically deceitful governance theater, that launching a token would end up just being a massive distraction for us, and then ultimately result in kind of like us never getting to product market fit or iterating quickly. And during that process as well, the AI agent development process, we're building infra that will allow agents to navigate the Solana meme coin trenches. And we ourselves were kind of trenching for a good amount at the moment. During that process, we also ended up finding that like pretty much most of the problems that you see today in the Solana meme coin trenches when it comes to bundling, supply control, like teams effectively rugging as soon as they like run out of volume, we're all kind of like really isomorphic to the same problems we had with Slate and like choosing not to launch a token. So as we were kind of like exploring those problems, I ran across, or like I'd been familiar with Futarchy for quite some time, but I basically ran into like a more modern developed version of Futarchy and decision markets over at MetaDAO, and kind of realized that a lot of the problems that we were facing in the so like Solana meme coin trenches, as well as like as real product builders, were rather elegantly resolved with the introduction of market-based governance. These were kind of like problems around token distribution, supply mints, emissions. We thought that if you designed really accessible market-based governance or Futarchy tooling, you could build something that, or build an ecosystem that had less pumping and dumping. You'd have more quality tokens being launched because the incentives would get aligned. And then just generally, you'd be able to build out more interesting projects. And so that pretty much led into my development of percent markets. So percent is effectively a decision market or Futarchy protocol. Some of you viewers probably already know, like given the noise this week about what Futarchy is. But
I was about to say, could you kind of explain that? Sounded you were getting right there.
Sure thing. I mean, Futarchy is basically, or like decision markets are a subset or an application of prediction markets, where those prediction markets can drive governance. So like a super simple example could be, maybe the dev team does not have enough supply to be able to continue building. And you'd want to be able to mint them supply, but you don't want that dev team to necessarily just have complete control over mint authority. So they don't have the ability to mint 99% of the supply to themselves. You could throw up a prediction market that offers, for example, to mint 2% of the tokens to the dev team for continued development. And that prediction market, like what effectively users of that prediction market are doing, are betting whether that proposal or that decision would be profitable or beneficial for all token holders. And if it is, the decision ends up going through. And if it's not, the decision doesn't go through. And I'd be happy to show you guys like a bit of the product itself. Like maybe
absolutely. But we love demos.
Yeah, for sure. But yeah, percent markets at the end of the day, like Futarchy decision market protocol. Initially, our goal is my goal is effectively to give every token that exists access to Futarchy. And then longer term, we want to develop quantum markets. There's like a paradigm paper about what that is, as well as like explore perpetual decision and perpetual Futarchy markets. And I think,
how do you spell Futarchy? I'm sorry.
Yeah.
I've never heard of this word in my life.
I got you in chat.
Okay, thanks.
You got him.
You got to get up to speed because we got MetaDAO on later this week, so you got.
Yeah, I know. I'm
Exactly.
writing notes on this, and I'm like, can't get it. Thanks.
Yeah. I think just last piece, pretty much like I think decision markets and just like variations and derivatives of decision markets really can unlock a future where we have completely new products and businesses and organizations on chain that like can't possibly exist today. So I think you could get to a world where you have AI agents that are creating and trading proposals, and then eventually maybe even get to the creation of like 0-person companies or 0-person organizations. I know Kyle Samani was kind of big on this, but at the end of the day, like if you have an AI in the middle, you have a bunch of market-based governance that prevents it from doing anything that's poor to price action. You could design a system of incentives that basically where you have like no one in charge of that particular organization or token, and yet it manages to create value. That's like super long and super long term, super out there, but it's kind of like an interesting application. I think that Futarchy and decision markets are a necessary component of being able to get there.
And so will Percent have a token? Obviously, ZC has a token.
Yeah, okay. Percent's going to have a token. We're going to launch on ZC. And, we can maybe get into that a little bit, but there's like a pretty particular reason why we ended up choosing to launch on ZC. I think as you guys can probably realize, like a lot of the perspectives on like incentive alignment are quite similar between the two teams. So there's a lot of natural fit there.
Yeah, let's get into that because I know with the launches on ZC, there's going to be it's going to be tokens will be kind of airdropped and so that kind of aligns incentives. Can you like just explain that for the audience a little bit for everyone to kind of get clued in on that?
Yeah, so I mean, probably the biggest reason I wanted to launch on ZCombinator is really the first launchpad that allows for programmable control of the mint supply as well as the LP. Pretty much all other launchpads, like Believe included, have LP locked and or completely like burned or no access to mint authority. That pretty much means that like most of the interesting applications you could build with decision markets or Futarchy are off the table. ZCombinator was kind of the first launchpad that really allowed this to be a little bit more permissionless and more programmatic. And so an example of something like this would be, or like why ZCombinator matters here. As you guys, as Hans had mentioned, ZCombinator currently emits like 1 million tokens per day to like the developer of like whatever token is launched. With percent markets on top of ZCombinator, you could launch prediction markets or decision markets that control that emission rate and also can control where those emissions go. So if, let's say, the markets think that the dev is like slow rugging and really not working on things, the markets can reduce the emission rate down to 0. And if the dev is capable of spending supply in a way that's driving growth really aggressively, and 1 million tokens a day is just not enough, and you'd want to maybe bootstrap growth a little bit harder, you could have decision markets increase the emission rate. And then you can also kind of like programmatically build things on top of that. You could have those emissions be streamed to stakers, perhaps like some kind of marketing organization or like suborgs or even partnerships. And this can all be done with kind of like prediction market governance rather than some like backtable cabal that's like just voting in their best interests.
Okay, so I have a question because I think it's Steve Jobs that says this. The markets don't always know what they want. The people don't always know what they want. How do you kind of give that founder that creative control where it's like, I really have a vision here and kind of align the community and the people that are voting on it to where he does have that freedom?
Yeah, I think this is it's also kind of like a rather fair criticism of Futarchy and decision markets. One of the like hard architectural stances that we took is that initially the founder should be in control. And so what that means is like with percent markets, decision markets, initially like only decision markets can be the only proposals that can even go to a market have to be approved by the founder or the builder. So It's not necessarily the case that the founder or builder can change the emission rate themselves, but they can choose what kind of proposals are even put up to a decision market in the first place. And so that kind of means that what really can't happen initially is that the market can put up proposals that the founder does not want to go forward with, and then like just derail the project altogether. The founder could end up down the line it could give the market that capability, but initially we kind of give all that power to the founder itself. And I think the second piece is like you always need some level of constraints on the founder. I think there's like a trade-off space where you can give constraints and that ends up giving the founder more leverage. A really simple example of this would be, if you're, let's say, fundraising, like you're never going to get capital without there being some kind of constraints on your behavior, but that capital is still going to bootstrap growth and help you build your product out faster. So like as the founder is kind of asking for more leverage from the markets, and as the founder is trying to, let's say, just go a bit faster, the markets can then determine through these decision markets how much governance should the founder be getting, how much governance should the markets be getting. And so you can imagine a world where founders that are really efficient at allocating capital and are really tuned in with what needs to be built, the markets just give all as much governance as possible over to the founder. But founders that maybe are a little bit more experimental, aren't necessarily as tapped in, and maybe don't have as much trust by the markets, like the markets won't necessarily give them that kind of governance.
I have a question around governance in general. I've been involved in governance going back to the 2016 DAO hack, even in the voting that happened there. It typically, and especially in DeFi season with all these governance token, was a very cumbersome, slow process that it seemed like no decisions were made. And if they were made, they were always typically either performative at best or in the best interests of certain token holders. Does percent markets like speed that up, or has the direction from that voting, is it kind of like prediction markets where it's like a yes, no, and it just is a lot easier? Like, how do you feel like you've generally improved on that process that speeds that up?
Yeah. I mean, I think the first thing to note is like that it's a market-based governance system rather than one that's voting based. And so there's natural incentives to participate as you could profit off the markets themselves. And like the end result involves like any market that ends up passing is ultimately profitable to token holders because it needs the underlying token to pump. So there's just a natural incentive for these things to go a lot faster. And then because there is that profit motive and you are aligned with token price, like most of the performative behavior is pretty much just washed out. It's a bit of like a Darwinian system where like those that are most correct about what drives token price up end up accruing the most amount of leverage to be able to participate.
Yeah, I love that improvement. I want to ask quickly about your fees, and I don't know if Dom was going to ask this next, but one of the kind of feedbacks that we've gotten around ICM tokens is the 2% in and out on Believe tokens specifically is obviously a tax. Ideally it goes and it's accredited to the overall project as that funding flows through. But do you see the fees increasing the volumes and just tradability of the tokens on ZC?
Hans, you want to grab this one?
Yeah, I think the answer is absolutely. I think fees are fundamentally a blocker to activity. Like people are obviously less willing to clip 10K round trip constantly if they're getting 2% fees on every single trade, along with maybe whatever front end they use, right? And we think it just incentivizes all the wrong behavior. And I think that's the behavior that you see on these other platforms. Like I kind of alluded to earlier, like if a developer is focused on their fees because that's their revenue source, then that is going to be really bad for the project. And then similarly, I think it also kind of leads into the exiting problem, which we haven't talked about, but I thought I'd bring it up. Like I think on other launch pads, when devs are selling tokens, it kind of implies that they're kind of done spending time attention hacking to maximize their fees. Whereas on ZCombinator, I liken it much more to like fundraising. And And I think the best way to think about that is like, we think there's like two premises. Like one, tokens should accrue value instead of equity, otherwise the token is worthless, right? And two, the funding to like fund real product building needs to come from somewhere. The best way to do that is by selling ownership of the product, right? So what that leads you to is that the best way to fund the real building of real projects is by selling tokens to the public market. And I think the problem is that without the incentives or something similar that you have on ZCombinator, when you sell on other launchpads, it's viewed as exiting. But when you sell on ZCombinator, if you choose to do so, it's more viewed akin to like a funding round, so you can reinvest that back into growth, right? And we think that just in general, having no fees allows for this behavior to like happen. I think there was a lack of kind of like a mechanism that the market could rally around, and we're hoping that ZCombinator is that mechanism.
Got it.
I think I'll chime in. I would add like no fees is awesome. I would love to have no fees on all my trading products, but I don't know if I would necessarily agree with the fact that it really inhibits too much trading activity. Just like when you go and spend with your credit card at stores, you're getting a 2% credit card fee, every time. I think fees are kind of just like naturally expected with trading terminals. You're paying fees. It's a nice, like, it's refreshing to see no fees, but I'm not sure if I'm actually convinced that it really inhibits a lot of trading activity personally. Is there an example you guys could maybe point to that leads you to this thinking?
Big Ray, I don't know if you want to chime in. I would take as well, but
Yeah, I mean, I think like we honestly just have to like test the assumption, and that's something we're like actively, or I guess that's like actively being tested. I will say like what I've seen thus far, anecdotally across the trading platforms, is those that have the lowest trading fees end up just generating like more continuous volume for their projects. And like you kind of want as a builder, like you really want price speculation. You want to get market feedback as frequently as possible, and if your incentives or at least like if your revenue or incentives are coming from fees, I think that can serve as like a pretty large distraction, right? Like you're sacrificing market feedback for short-term revenue, and then that kind of ends up like wireheading you into thinking that the best way for you to build your project is just to capture attention rather than build something valuable. Yeah, I guess like one other thing, like even for the protocol itself, like it's something that we've thought about, or at least like we've thought about for percent, and then as well as like I know Hans has thought about this a good amount for ZC. Like if you have trading fees on ZC, that probably makes it such that ZC ends up like optimizing more for tokens that generate a lot of volume in the short term, but like don't necessarily have like long-term prospects on market cap. And so it's something that I think even as a builder, like if you're building a trading product, you're like keenly aware of like what you're building. Like if I built a trading product that like optimizes on fees, like I'm always going to want to build some product that's like going to be in the meme coin trading space, because that's where the most attention and like short-term volume ends up coming from.
Interesting. I actually really like that take. I think it puts things in perspective. Even if, and like you said, you guys are into experimentation. So like I love the fact that you're trying it. That I guess would bring me to the question is how is ZCombinator making money? Like what's your kind of profit angle there?
Yeah, so we there's obviously no trading fees. So what we do is we take 10% of all token emissions of all of the projects that launch on ZCombinator. And I think like kind of akin to the incentives between the builder and the market, I think there's also incentive misalignment between other launch pads and their builders. Like kind of Uwe just mentioned, right? Like there is a solution where the dev of a token is not getting the trading fees. So they're like focused on the right things, but let's say the launch pad collects trading fees. We're making sure that's not happening as well. What we want is to be aligned similarly. So what we're doing is, taking the 10% of emissions. As a result, like our revenue is coming in denominated in the native token of the launches on our platform, so that we're also aligned and we get paid the most when these tokens do well on a market cap basis, not a volume basis.
This is interesting because you have to make money. So at some point, you guys have to liquidate. Are you like looking to maybe do only OTC when you liquidate? Like, or what are your liquidation plans in general? Because I could see people maybe having questions about that.
Yeah, absolutely. I think it's an extremely fair question. There's like one caveat I want to make, which is like, we're much more focused on growth right now than, let's call it, taking profit. However, that being said, we're actively exploring, let's call it, OTC mechanisms. I think a really fluid solution to this is kind of like single-sided LP that is gated to, let's call it like staked ZC holders, for example, right? So if you stake ZC, you have access to OTC deals for the other projects that come at like a small discount to the actively traded market price, right? So I think there are definitely creative ways to gracefully exit these projects if you need to realize revenue, and we'll say experimenting with it, but it's definitely not something we're concerned about in the near term.
Got you. Well, then, what does your funding look like? Would be the next natural question. How's your runway looking? Are you guys self-funded? Maybe fill us in there.
Yeah, absolutely. Like, we're kind of keeping the funding source a bit internal right now, but we have at least 4 years of runway, and we'll announce like, you know, the source of that in due time. Keeping that internal right now, but yeah, we have more than enough runway to sustain this project in the long term.
Cool.
I apologize. I don't know if I got the initial premise, but when developers issue a token, are they selling it kind of like an ICO at first, then the emissions start? Did I have that correct?
So the mechanism as it currently stands is actually, it's just a bonding curve. There's no like initial ICO. That being said, there's an initial bonding curve and then the emissions start immediately as well.
And the funds go into the liquidity pools, right?
Like you're saying, the minted funds, or?
Yeah.
The minted funds are claimable by the dev. They do not go into the liquidity pool.
Okay, so the dev gets those funds out to start building their product. What I was just trying to understand was, obviously with Believe, that's kind of the funding route for developers is the fees.
Yes.
But where that funding route for the developer came in, did they have to sell those 1 million tokens emitted, or are they funded some other way and that can just hold that 1 million tokens?
Yeah, I would say that like this is something we're actively exploring, but our initial ZC1 devs are devs who do not require like upfront funding as much as other devs might, right? And I think that's obviously because of the mechanism that we set up. Like, you're not going to get, like, if you want to make the most money in let's say 12 hours, you should not use ZCombinator, right? That being said, devs do need funding, and where that funding comes from is kind of up to them. But I will say, and I don't know if I mentioned this, but like as part of our initial cohort of devs, in the spirit of like using tokens to incentivize growth, all of the devs that join us initially are given a pretty sizable allocation of ZC, which they can use however they want, perhaps as like an initial funding mechanism. But yeah, there's no upfront cash in like, let's say, Solar USDC.
Yeah, got it. I mean, funding is not just for salaries. I mean, it could be for compute or some other things, but yeah.
Yeah.
This is a pretty interesting mechanism. So just to kind of make sure that I have everything clear in my mind. So you're basically providing this platform that allows devs that are more aligned to long-term building through this kind of emission mechanism that you guys have. And the way the bonding curve works, it actually just through ZC's own community building efforts, but also through the mechanism, you're kind of attracting and helping them to bootstrap a community based on the bonding curve that you guys have, right? So you have long-term aligned devs, you have a long-term aligned community, and then you're also, that kind of attracts more devs that have other aspects of funding other than just kind of like dumping the tokens on the market when they get them type of thing. Am I getting all of that correct? I'm just trying to like simplify this for all those listening and also a little bit for myself too.
Yeah, I think that's exactly correct. I think one thing to note, kind of like in line with what you're saying, is we think like the ability to use tokens to incentivize network growth, product growth, etc., is like one of the most powerful aspects of crypto. And I think it's quite a shame. And obviously it happened for good reason, but I think it's quite a shame that there are no like dominant launchpads today that kind of enable that in a way that the market can use effectively. So by having this emission stream, we really want to attract like crypto native devs that don't want to make money on fees aren't worried about their volume, but more so worried about having a token that represents ownership of a product, and they're worried about making that token price go up.
I'm extremely interested in seeing where this goes. I know you guys love experimentation, and I think experimenting in the way that you do will end up being a hugely positive for you. Um, but you guys are focusing on Web3 native developer teams, and I think that's complete opposite of what we see a lot of these launch pads focus on. We're seeing a lot of others kind of more focus on Web2, Silicon Valley, kind of these other startups. So hats off to you guys, man. This has been like a mind blowing conversation for me, because this is a completely different approach than I don't think I've seen anybody do it the way you guys are doing it. So hats off to you guys.
Thank you.
Yeah,
Appreciate
I
it.
think one thing I will add too is, since you guys have these long-term aligned incentives with anyone that launches on your platform, we see Believe has like a Believe Builder Fund where they're giving grants out to people. Is this something you guys are interested in? Because obviously their success equals your success.
Yeah, I think it's absolutely something we're considering. Obviously, I think the target market would expand if builders were able to get upfront funding, and I think grants are a great way to do that. We are actively talking to some, let's call it like funds that would be interested in providing that capital, right? But it's all of this is TBD, and we're like actively having these conversations.
Got you. And I'm not sure if I missed it, but or maybe I just don't fully understand. What is the you know what? Never mind. I just remembered you guys will OTC. That being
So
said, though,
okay, okay,
go ahead,
go
chill.
ahead.
Chill. Go ahead. I really have.
So the I guess the question that I had was actually,
Can I
I
go,
also
Chill,
just
if you need
yeah,
help?
go ahead, Josh. Tagging you in, Josh.
All right, all right, all right. I got two questions actually, and by the way, guys, this is a great conversation. I'm really glad we're having this. The first one is around tokenized equity. Do you guys have any take on that, or any thoughts if that will be part of your product suite in the future?
Yeah, I mean, I think probably the biggest or a big reason why there's like between the two projects a large focus on Web3 devs. So we think that the best way to uh, capture or have a token represent some kind of value on chain is if that value is being captured on chain. So if like, I mean, a good example would be something like Hyperliquid or any kind of like DeFi protocol, where like if the revenue is coming in through smart contracts and being paid out in Sol USDC or some kind of native token, it's rather easy to give ownership of those smart contracts over to some kind of like programmatic treasury that maybe eventually gets controlled by Futarchy. And then if you do something along the lines of that, you've largely created a scenario where like you're not investing in equity, you're investing in a token that's still capable of accruing value. And so that's kind of like where, at least in my mind, why there's such a large focus on targeting the Web3 crypto devs. It's because if you want to invest in tokens that are valuable, like the easiest path forward, at least in my opinion, is to target the developers that are building value capture systems on chain.
Yeah, and I think we've had this discussion at the highest levels of Solana Foundation. Members have come on here to talk about tokenized equity to ICM projects. And actually, what I think the combination of this launchpad plus the Futarchy decision making, it kind of solves a lot of those governance problems that these people have brought up, where it's like, okay, let's say there is some sort of exit or some sort of event, like do token holders have rights? And essentially what you're kind of trying to do is enforce those rights through some sort of decision market, where you can kind of turn on or align incentives with the builder just by economic voting, basically.
Yeah, that's
if I got that correct. Maybe my last question, because I had a second one for really quick one, was just highlighting builders for traders to find the tokens listed. Is there a listing page where people can see it, or do you have like a builder weekly spotlight like we do with Believe. Actually, we actually host their weekly spotlight.
Yeah, so if you click on I don't know who's in charge of like the UI, but if you click on the projects page, that's like where all of our listed projects are. There's like verified and all. So there's not many right now. We're actively onboarding devs, and we have a lot of devs in pipeline that are looking to launch over the coming week. But this is basically like a really, really simple snapshot of the devs that have launch tokens on our platform. I mean, our token is there as well because, and I don't know if this was clear, but we launched using the same mechanism that all our devs are launching with, and we're using the same UI to claim our rewards, like reward people, et cetera, that our devs are launching with. And I think that's really important in terms of like improving the developer experience, because it's not easy to manage a token. And I think anyone who's launched a token can tell you that firsthand.
Yeah.
And I think there's a lot of low-hanging fruit when it comes to managing emissions and using them well.
Can you just zoom that in, Dom, a little bit? I'm just trying to see what data is being shown here. So I see you have transfers. Can you just walk us through what traders should expect on this page?
Yeah, so this is a very, very bare bones, doesn't look great transaction history. And this is to basically increase transparency into what the dev is doing with their emissions. And I think that's really important. We haven't fully built it out.
A lot.
And it currently lists all transactions, but eventually we'll add a filter where you can basically check on who the dev is sending their emissions to, why they're sending them, and basically make judgments about, you know, the strength of the dev, the strength of the project based on how emissions are being used and what those emissions eventually do, right? So for example, as a dev, you know, if I'm rewarding people that are contributing to the protocol right now, I don't really want to reward people that are just, you know, immediately selling the supply I send them, right? I think the most bullish outcome would be if I send rewards to people and they immediately stake. We haven't talked about staking, but basically, I think transparency into what is going on with these tokens is really important. I think using SolScan is extremely, extremely difficult. And you want to just make our UI a very easy place to understand what's going on with the tokens you're investing in.
Yeah, totally. Like, so what's key about this is it kind of filters the most important information, whereas in other ICM projects and other launch pads, unless you know like the developer wallets or you know how to use SolScan, like this information is kind of you know, not accessible to everyone, whereas this kind of just filters it out and says, all right, you'll use Dex Screener for everything else, but you don't have to click through a million wallets. It's right here.
Yeah, exactly. And this is nowhere near, like I personally, I mean, to be completely candid, I wanted to work on this page for a while, but I haven't had the time.
Yeah.
There's obviously,
if you guys get this right, I think this is a key differentiator is this page actually.
Yeah, that's a really good call.
Only on MCG,
Wow.
man. Only on MCG.
Maybe I'll send you some tokens
Lots
after.
of feedback.
Would love it. Would love it. Hey, look, we'd love to have ZC involved. So absolutely would love it.
Look, as you guys kind of launch more projects that you want to highlight, send them our way. We'd love to cover some of these new models, and I think it's super interesting. And this conversation has been super interesting. But that's all I had from a question standpoint. I'm sure more will come up after as I'm thinking through this conversation. But super great talking to you guys.
Absolutely, man.
Yeah.
I think this has been a really good conversation. I really appreciate your questions.
Chill,
Really
Josh.
huge
Anything to
having you
wrap
guys
with?
on. No, honestly, I think he answered my question. My question was just about, you know, how many devs have you guys actually seen, you know, kind of want to use your platform? And you guys said you mentioned you had like a nice little pipeline set up. So, you know, again, just we're going to be tracking this. We want to see how this experiment works out. You know, how things go with ZC. So, you know, if there's any updates that you guys have in the future that you'd like to share with your community, definitely hit us up. Let us know. We'll be happy to have you guys back on stream, but really excited to see what you guys are doing, you know, with ZC. Thanks.
I have to ask,
coming.
how's the Uguay token performing?
My understanding is that it's doing quite well. The Uguay community is rather
It's
happy.
strong.
Yeah,
I love that.
They've been wanting to rename the group chat from Uguay Vision to Uguay Cult. Which I've been doing my best to prevent.
That's good, man. That's good. All right. Chill. I'm not sure what you got up. Oh, the Uwe chart.
Oh yeah, there it is. He's
It's
just
going
talking
crazy.
his own bags. Talking his.
No.
Leave
No,
that
really
up.
appreciate
What was the
you
market?
guys.
What was the market cap of Uguay?
It's like
500 something?
500K. Yeah, it's like
500K?
500K.
Uguay, do you want to just briefly expand on what your token is about at all?
Yeah, I mean, I can like Uguay was like largely an experiment in trying to create a token that was completely aligned with my own incentives, or like aligned with my like what I wanted to do. I thought that it was would be a pretty difficult challenge, like technical challenge. Like, how do you build the mechanism such that like I want to work on Uguay rather than like I extract from Uguay, or I feel like it's like a drag on my own time. And so it's kind of like the perfect experimentation board, mostly because like a lot of the mechanisms that we're actually playing around with today came from insights that came from Uguay. We've also been like Uguay's kind of like picked up a bit of a treasury. I think that's like what a lot of people are also bullish about. This treasury like happens to own a good amount of ZCombinator, as well as like some other tokens. Teams like want to send their tokens into Uguay because like the community's rather tight, and they're like I think they do a good job just like giving attention to all the projects inside the treasury. So
Do you think there's a nice catch-up trade here to Pasternak coin?
I'm not going to make any comments on that.
Leave no comment.
Cool,
Awesome. Yeah, no, I really appreciate you guys coming on the show. And again, we'd love to have you guys back on, but extremely like interesting conversation that I think all of us like our minds are just kind of blown with what you guys have been able to come up with. So excited to see what you guys come up with in the future, man. Thanks
Keep
so much for coming on.
Yep. Thanks, guys.